All right, so good evening to all of you, and happy new month. So you can hear me. Let's push it down into the chat box and let's start work. I welcome all of you to Dreamdale Academy Introductory section, day 6. As we are currently in day 6, and we have about few days more to end this session. I urge you to take it a little bit serious. If you did not give up to this point, I can say you are ready to change your financial history. I can say that. Okay? And last week, Friday, oh, today's Friday. Today's when? Friday, yeah. So Wednesday, we treated a very important topic, trading by session. And then I don't know if any of you practice it or try to check if it works or if it played out for you. All right. All the same, we will be continuing our teaching. And we are delving straight into the technicality as far as trading is concerned. How do you know? Okay. Oh, Sulu, job. I did, sir. Indeed. London break structure. Thank you so much for doing that. If you practice it, you realize that it is true. And London will always do that. So if you don't want your trade to be hands, like I said, then you have to know how to deal with session. Very important. It also depends on the assets you are trading at the same time. Now we have many ways to forecast the market. Many ways. We have many ways to forecast. I would like to. How many Ghanaians are here? You please raise your hand. How many Ghanaians are here? How many Ghanaians are here? Is it that I'm not audible or you people are enjoying Friday? Okay. All right. We have three, two. Okay, two Ghanaians. Ah, how many Nigerians do we have? Okay, no Nigerian. I'm going to talk to those who can hear me. That's two people. If you join the Zoom on purpose, then there is no need of you doing other things. If you want to do other things, then don't come to the Zoom so that you know exactly the number of people that are decoding our information. You might not value it now. And the time will come, you will wish you were serious. And that time, you might not see me to teach you. Okay? So let's be serious. All right, so today we'll be looking at market structure, and we'll touch it base with the outlook, then how to determine the direction of the market. And we'll be looking at few assets or currency pairs. Right? So we can see Euro versus Japanese yen, EUR, JPY, or EJ. You have somewhere you hear us saying EJ. That's you. But before we go into that, please, those of you who are new to trading, okay, those of you who are new to trading, I will advise you, don't play with XAU USD for now. Okay. And so if you have the heart to control, accept its movement, no problem. But if you don't have the heart and you are thinking of a long term, you don't want anything to break your heart too early, you need to know how to play with XAU USD. You need to know how to play with gold USD. Very, very important. Now, USD is the put, XAU is the base, and there is a news, a fundamental data. Now, look at the length of the movement. Let's come to GBP USD. Look at the length of GBP USD. Let's take Euro, EUR USD. Look at the length of EUR USD. We used this asset to do our trade by session the last time. And if you can remember, we say something about these three lines acting as a resistance. That was Monday, right? And is it Monday? Wednesday, sorry. And on Thursday, the market react towards this level, then almost targeting that area. Now, anything that you learn, once you did not put it to work, you'll forget it. If you are a seamstress, you go and learn it without practicing it. Okay. So please practice what we are teaching you. Is that okay? Let me hear yes or no in the chat box. So if you are trading gold and you make a mistake, right? You are selling here, regardless your equity, and you did not manage your losses or the risk well. This move can blow your accounts. And then when this move blow your account, or you are in negative, the problem is the majority of traders don't like to see negative. So because they don't want to see negative, when the market is going against them, you see them challenging the market. And when they challenge the market will beat you. And when the market beat them, you see them adding revenge. You add revenge, you end up losing all your equity. Then that revenge remains in you. You redeposit. It is at the back of your mind that I am taking this money back from this market. And you go in with that mindset. No go well. All right. A lot of observations were made. Personally, I got caught up in this fundamental data. See here or here? Well, one of them. I think it's here also. Yeah. I got caught up in this fundamental data and I accepted my loss beautifully. Now, if it gets here, let me expand a little. Let's say I got caught up. My first entry was the yellow line. And my second entry was around 2037. And then I'm expecting the market to what? Sell. Yes, there was a fundamental data, but I was thinking, and based on my analysis, I was expecting price to push to the downside or pushing up. Now, instead of pushing to the downside, it has already been a push down phase, right? So if you look at it on the 1 hour, 4 hour, 2 hour time frame, it seems like there is an impulsive move to the downside, right? Yes, there was a zone here. All right. So when you enter the trade, assuming I'm still holding that trade from Thursday, that's yesterday. Was it yesterday? Yeah, Thursday. Assuming I'm holding that trade yesterday, that I'm expecting it to come down. You know, I'm expecting it to come down. What will happen to me by now? My mother would have been taking care of me by now. All right. So if you want to trade and you manage your risk well, what do? The market will take care of itself. If you refuse to take your risk management very well, your mother have to take care of you. So I have lost about 15% my equity, which is 25% on my equity end. Okay. But the point is, I can build back. Now, this move here alone is over $30. Over $30 for the minimum lot size, right? Let's say you are trading with a $50. Then from here to here is $15. Then you say, no, I will hold this trade. You have to come back to my entry. I'm not going to give it a chance. Who dare you? The market. I'm making my money back. Then it will come and give you, I'm selling. The interesting thing is that you will almost be breaking even. I will say, let it come down small. And then coming down, boom. The problem is that you enter another cell somewhere here. You come down like this. Then, boom, the top. Right? So one thing is that identify the trend of the market. Now, what I realized, yes, the market creates many reasons to what? Reverse. But those reversals are corrections. Now, myself, I used Fibonacci over here from this base to this base, and I saw this area being 61.5, 61.8, and then 50.0. And when there is a validation on that area, you will definitely have to look for continuation. That means the market only retraced. Aside that, sometimes we still want to go with the trend, probably expecting it to push down because you are expecting a fundamental data. Not all fundamental data create volatility. Some fundamental data change the market direction. So when you put your Fibonacci down, you will see 61.8 here. And then the market, if you put it here again, you will see another 61.8 here. So if you are even trading with Fibonacci alone, you'll be able to take all these moves at the same time. The problem we have, I used to have that problem a lot, is that when we are trading, for instance, as you're on the 4 hour time frame, some of you, sometimes you even feel that the market bought too much. It must come down. But when you push it down to a day time frame, you realize that the market is not yet done buying. Okay. So there was a time in history, somewhere around December 2023, 4th December 2023, a very beautiful Monday. Gold came all the way 2,149. Guys, check it out. So the market was here. The next day it dropped here, and that day it moved from 2021 all the way to what? 2149. Look at that massive move. So it means that today's move is not even compared to that move. So the market just gets here and reverse back immediately. You push up and come back immediately. This is something like a volatility news. So all those who sold here and all those who bought here, they did not put their stop losses and take profits well. What happened to them? The market would take their stop losses. So when the market is creating a volatility based fundamental data, you can then say, okay, probably I'm taking a quick sell or a quick buy based on your trend. But then from experience, no matter how the situation, once the market structure, the outlook of the market, the direction of the market is telling you that I am going up, okay? Once this is telling you that I am going up, let me hide this. I love my line, so um, once the market outlook is telling you that, oh, I am going up, what you should look for as a trader is relax and allow it to breathe. Then you go forward. The chances of you making mistake will be lesser than doing counter trend. Let me repeat myself. For example, this is a daily time frame. So one day, one candle. So the problem is that when was the last time you squeeze the chart this way to see what market is doing ideally? Okay. So over here, I think I've been actively in trading when this market gets here, May 2022. So you can say that 2022 created a high in March. Yeah, created a high in March. And then 2023 May, it created a high. And we can say that in December 23, price broke all those highs, right? Now, I'm going to use a different asset, but I want to squeeze this chart just for you to see something, okay, as small as I can. So when you look at it, gold has been an uptrend for all this while, okay? So those who are position traders, they know how to handle this. Now, we are not position traders. We are kind of like scalpers. We want to take some quick money, go out, look for another opportunity. But as we come to daytime, before this market starts going up fully, you can see that it gives you a triple bottom. Okay. It gives you, let me on my AI. It gave you a triple bottom. Now, this triple bottom, a lot of people have definitions and ways they want to relate it. But market came, this was a previous low, okay? Um, so this was a previous low, and this low matches with this area, and then matches with this area. So in consideration, this area will be considered as the previous support. Now, the market broke that support, creating a new high. Now, this high is lower than this high, and this high is also lower than this high, and this current high is lower than this high. So it means that the market is going a downward trend, giving you higher lows and lower lows. So this low is higher than this low, and this low is higher than this low. So this is the low. Now, some people will buy here. Yes, they are correct. But then maybe they are targeting this area for take profit. Then the market come to this level. Why did it come to this level? Let's push it to the backside. There was a level that was broken, and it come to what? Respect that level. We call it test the level and rally to the downside. Then it'll make it look as if it's creating what? Another low here or respecting that low. So many people will jump into a buy, especially those who have the, the knowledge about support and resistance without taking into consideration the like psychological effects of support and resistance. Then those who are not able to understand the concept or the blend between zones, demand and supplies, and resistance. Okay? Most of them will go for a buy here. The market will give you a little profit and break the structure to the downside. When you get to the downside, you push up, consolidate, come back to that same level, and then give us a triple. That triple bottom is a sign of reversal pattern. Okay, it created three bases. It's a sign of reversal pattern. Now, if you actually, this is a day time frame, so it took many days for this thing to complete. Many days, these things to complete. So after that, you give us a test. And when we go back to history, this test is in line with this area. Okay. And we can, when we keep tracing it back, we'll see a reason why this market did that. There is the market doesn't do anything for just doing sake. There is a reason. Market always does something. And there is always a destination price. Now, the problem many traders have, and then those who are new, you have is that you are impatient to wait for price to get to the destination. And then you are impatient to wait for price to give you a green light that I am leaving this destination. When you are able to be calm and patient for price to inform you that I'm now preparing to leave this destination, you will be able to try and forecast where is the next destination. And one thing I observe is that the market moved from a zone to a zone. Market always move from one destination to another destination. And if you spot your zones well, you will see that. And interpreting this zone to a zone is just like market moving from a demand to supply or a supply to a demand. And at the end of the day, there is a rest stop on the way. Okay? At the end of the day, there is a rest stop. Now, those who will refuse, they'll refuse to understand the concept of market moving from one zone to another. And they will not take into consideration the higher time frames and then understand the concept of multiple time frame analysis and then probably top-down analysis. They will want to make a decision in the middle of the trend. Okay. Now, we will try to help you identify those middles and the tools you can use to identify those. So if the market is meant to be an uptrend, just to go up, the middle destination can just be like it is selling, but it will give you a short sell. So when you are able to get the entry from the base, which is a zone or a demand area, and price is somewhere here, what do? You can either adjust your stop loss or quickly put a Fibonacci. You put the Fibonacci retracement from the base and pull it to the top. And once the market is pulling to the downside, your target will be the level that is going to give you something like 68.1, 50.0. When price break those areas, automatically it's reversing. Should you be holding your trade? If it is not going to break that, based on the approach it uses to get to that level, and then the push down it makes will tell you if the market is going to what? Continue buying. And if it is continue buying, the probability of it hanging up here again to validate the new high as a resistance, that's the first thing, or to convert that new high to a zone, or to convert that new high to a supply is what you need to now understand. Right, let's climb up a little. Now, at this point, many people, okay, many people, instead of buying here, they actually end up buying here because they want to see an evidence that is buying before they buy. Just like those who are waiting for Bitcoin to start buying before they buy. So instead of they buying from 18,000, 20,000, 30,000, 40,000, they end up buying at 55,000. Some people are not even buying because they now believe that, oh, we thought it won't buy. Don't be like that person. Now, over here, a lot of traders always get it wrong here. And this is the time we get confused the more. What happened after this? Now, if the market is moving like this, then the question is what happened? You can see that this is what? Pullback. And then the market push up, then another pullback, then a push up, then it started dropping. But this current drop did not go below. That's something you should look at. And then from here, it creates a new low. This new low is higher than all this low. It's an evidence to you that the trend is still going to go up or will keep going up. It then creates a new low again after this impulsive high again. Then push the downside, giving you something like a falling wedge. Okay, we are going to look at those stuffs, then push them. Some seniors are here listening. I'm sure by now they are correcting their mistakes. Now, to be successful in trading, please don't be static. Don't be static. Be dynamic. Observe the market. Don't focus on what you learned and what you know. Let the market be your teacher and guide you, right? So identifying the outlook, the structure is just to be able to derive the fundamental basis on what is controlling the movement of the market and then determine the direction and use that direction to get your entry. Then use that same direction to spot where the market is going to stop. That's the stop target and the rest. Are we following so far? Please notify chat box. Are you following so far? Let me know quickly, right? And be making your notes, right? Be making your notes. It will get interesting, right? So, Mark, this whole thing you are talking about, let me understand in a different angle. Now, when you got to, let's say you are currently here, and then the market starts going up, you are a new trader, you did not see all these histories, all the stories I'm telling you, you didn't see all those stories. You have the right, but then you now see that, okay, the market came from the base and is going up, which means that gold have been dominating United States dollar for a very long time now. It means that all the sales that we are selling and is going in our favor, it is somehow like a correction. Okay, if you take this whole move to the whole trend, ideally this is a correction, right? A continuation. Ideally, that is what it means. But you are looking at this chart on daily time frame. You use the daily to know the outlook, okay, to understand market movement, to understand market structure, to know what the market is doing, right? So now we are expanding. So you meet the market here on a day time frame. What can you deduce from it? Okay, so let's take it from here. So we have a level market created here, okay, that level. And then before that level, market was here, giving us a harami candlestick pattern and then bullish to the top, right? Then go to all the way here. Now we need to consider this area as we're analyzing and also consider this area. But then after this, get to this area now. Okay. Now, a lot of people, including myself, we consider this area as a resistance. Okay. Then we also consider this area as well as a resistance. That is where we sold up to this. Then the market now give us what? The morning star formation candlestick pattern over here and start buying. After the morning star, yes, there's no much impulsive movement in it. It's kind of a consolidated push-up, right? But what you should take into consideration is that the buy pressure is more after all. The buy pressure is more after all. So this is a correction. These 2 days are also corrections and pullbacks because the major movement of the market is an uptrend. When you see this, okay, on a day time frame, the major movement market is giving me is an uptrend, even though it did not create a demand. Now I want to buy or sell. You can now step down to 4H time frame. You can now step down to 4H time frame. Now it will help you understand that structure you spotted. Okay. Now everything you've seen on the 4-8 time frame looks a little bit different, but you've already seen that the market is trying to what? Go to the top. So on a day time frame, what you see as a morning star is looking something else. Okay, so we get to that point where we draw patterns and identify patterns. You will be able to understand the types of patterns we have and how they play a role in the market. Then you will see market doing these ups, down, ups, down. Now, it's kind of like a sequential movement, right? Kind of a sequential movement. One thing you should take note of is that even though it looks like it's not moving or selling, the buy pressure always overshadows the sell pressure. Okay, the buy pressure always overshadows the sell pressure. The buy pressure always overshadows the sell pressure. This is what the market is doing. So it is taking a whole lot of people. For instance, somebody see these areas as a resistance, and then they sold, and then they sold. They are not wrong. But the point is that where are you putting your take profits? Are you selling here, putting your take profit here or here? Do you think market is having that strength to push that downside? And then over here, a push up again, giving us an engulfing candlestick pattern. Then push to this top and now at this, in all this movement, market did not give you any reversal pattern, not even to talk of reversal candlestick pattern, because it's a sideways movement and then it's pushing to the upside a little. So the point is that as far as it's a sideways movement, what you should wait for is let it calm down. After it calms down, you look for a buy opportunity. Now, in that case, majority of you cannot interpret this structure properly. So we go to a 4H and 1H time frame, but now look for probably an entry. But we might end up getting a proper candlestick approach, make a decision. Now, if you are on some other currency pairs, you will see things very beautiful than you are seeing here right now. Okay. So at that same time, everything is what? Consolidation, sideways movement, and then climbing to the top, breaking resistances slowly, and then pushing to the top. So in that case, Once you confirm on the day time frame that the market is an uptrend, what do? You look for more of buy opportunities. Look for more of buy opportunities and the rest. So over here, even if you are selling, your stop loss, your take profit should be before this area. But if you hold, it means it's bringing you to this area. So if you don't know how to catch retracements, if you don't know how to catch retracements, please go with the trend. So if it is a buy, and the market is doing this, you don't look for a sell. Wait for it to finish. Then you look for a reason to buy. And it goes up. Now, if it is happening this way, you will be able to identify it easier than when you do this and it's doing this. Then it come and do this and do that. You identify it fast. But as much as that, all these are patterns. That's why when you want to be successful in a game, you try to learn from all angles to fuse into it at the same time. So this is all about the market structure, the direction of the outlook, the structure, the direction. Now, the things you can use for entry, one of them is candlestick, and that's the major, all right? Now, I don't, and I won't recommend indicators for all of you at the moment, okay? But for a guide, you can put a lagging indicator 250, all right? And then apply it on any time frame that suits you. Then at least use it to gauge the direction of the market. Now, if you are using it, you can see that over here it's neither giving you an up or down, okay? But somewhere here, you can see that it clearly shows that there is a break of structure above. So the point is that even before this news, a lot of sales people sold at this area. So many sales happen here, many sales happen. And those who sold here, this move hit their stop. And then those who sold here and they were expecting a long move to the downside, this move also hit their stop. Then, as it is moving, some people will also sell around here. Okay, this move will still break it down. Some people will also sell around here. There are people that are safe or will be safe are those who somehow now entered a sell. But then the confirmation is not yet there for you to expect a sell. People will say, oh yeah, I'm expecting a pullback. Now, if the market will continue to be a trending up market, yes, the pullback will happen up to, it could also come up to this area proportional. But will it come a straightforward push down, or it will also come a sideways push down? If you come in as a sideways, then why would you wait and for it to finish whatever it's doing? You get the direction clear and you move. So these are also things that you should put in mind when the market is pushing up or pushing down, right? Now, let's take another example. This time around, let me use odd NZD. Let me use odd NZD. Let me use Euro USD. Let me use Euro USD. Now, so at the same time, you go for a day time frame, squeeze it nicely, right? The first question you ask yourself is, where is the market coming from? So from 2021, United States dollar have been stronger than Euro. Somewhere September 2022, then Euro started gaining strength against it. So we have the market went down. There was a support that around here. The support got broken and tested. So the outlook of the whole market is that um, euro dropped, and then euro is now gaining strength against. The worst structure is it drawn. So it gives us a reversal pattern at the base here. We are going to look at reversal pattern, so don't worry. Give us a clear reversal pattern on a day time frame. Then push the top, breaking structure and respecting the previous structure. Then, as it's breaking structure, respecting previous structures, it now created a level here. Now, this level on a bigger scale, you can identify this whole area as a zone. Okay, you can identify this whole area as a zone. Forget about this, my lines. Okay, let me just clear everything. Let me start all over. So you can consider this whole area as a zone. Now, why should you consider it as a zone? I'm going to tell you why. Now, how is this market going up? This market is going up this way. We have a trend line up. We have some at the base here, but it's currently not needed at the moment. And we squeeze up a little because we sometimes don't have to only use historical data to analyze the market. You have to break it down a little bit to the current data structure as well. Now we're looking at the current data structure. Price is currently here. What is market communicating to you, right? So you can use the rate tool and push price here, a little bit here, and then try to factor into what the market is doing. Do you think there is a zone here? What kind of movement? So the market using a sideways tick movement to the downside, and then you zoom out a little because you somehow forecast the movement of the market. Over here, there is a base, but there's not a clear reversal pattern. Those who actually understand ABC pattern and other advanced elements, they will definitely get a move. But over here, we have the candle being a bearish candlestick and then giving us a harami. And this bullish movement confirmed the uptrend. But you can see that there is not much momentum in the movement of price, right? So over here, what you need to do is that you can now, at least you knew where the market is now, and then where it's going. It is at the base going to the top. Now you come to the top and figure out, is there any area you need to consider? Yes, I'm going to consider this whole area as one. Then you ask yourself at the base, is there anything you should consider as well? I'm going to consider this area as the base, but this is where price is right now. Okay. Then I can go for 4H. So under 4H, zoom out a little so that I can see structural movement of price. Now, what we drew on 1H, day one, daily time frame is what appeared here, and then the base point here. We can see that this area 1, 2, 3 can be considered as a zone. Then you can also see that you need to add this level because price has been here before. Now, when price was here before, what do you need to do? Now, depending on the type of trader you are, do you trade in a ranging market or you trade in a consolidating market or you only trade in a trending market? Now, depending on the rules, if you trade in a ranging market and market is doing this here, you don't trade, you only trade a trending market, the market is doing this here, then you don't need to force yourself and enter a trade. That's why you need to define your rules. You need to define, I want to trade trending market. I only trade trending market. I don't trade choking market and all this stuff. So when you define it and you still want to trade because over here I see it as a consolidation on the 4 each time frame. Maybe you're a scalper and you feel that okay, based on my style of trading, I can be able to capture some few pips as well. You drop down to 1 each time frame and see if you can get some candlestick patterns for entry. Now when you get to this level, you realize that okay, is there any candlestick? Now, if you're looking for an engulfing candlestick after this candle, are you cool to buy here? Will you get your risk to reward ratio? No. But over here, can you get any? Yeah, we have a little bit of bearish harami and then a confirmation sell, but sell and then they push the downside here. Over here, we have an engulfing candlestick pattern. You take it from here. Well, you can a little bit consolidation, get to the base here. Now, what are we to expect? Right, that's when we come to forecasting. So if it is me, I want to make a decision just on this 1 each time frame. I'm going to be looking at this level 1. Okay. I'm also going to be looking at this area as 2. Then I have a primary resistance level here. So if anything, I'll be expecting price to push into this zone, this area, this whole area, 1 or 2, and then give me reasons of a reversal pattern. Okay. Maybe bearish engulfing candlestick, tweezers, tops, and the rest. If you give me any of those tops, then I can be considering this place to be a resistance. Okay. And then expecting price to what? Push to the downside. But then if based on how market is approaching this primary area will tell you if the market will price will break through this whole area to the top. Now, if price is going to break through this area to the top, are you to buy here right now, or you should hold on? I will hold on. Okay. Now, the only point that I may consider to buy is probably price push back to this area. Price push back to, let's say, all of a sudden, market push to this area, and then give me other reasons to buy. Now, if it is pushing down to this area, the first thing I will use is to put a Fibonacci tool at the base and drag it to the top, and then see which values is it coming to respect. They get to 50.0, 61.8, and give me the needed reversal conditions or confluence. Then I will expect a buy, expecting it to break this structure. Now, when it is breaking this structure, or you saw it broke this structure already, you need to wait for it to push you into the zone, and then you can look for another pattern. Right. So this is how you treat the market. Right. You need to practice it more so that you can be able to understand the rule it's using to govern itself. You get your entry, and you can be able to make some cool money for yourself. So if you have a question, please raise your hand. I know a lot of people are confused right now. Like I used to be. Right? There was a time I see all these things as movie. And when people are on trading view doing all those top meta trader, like what are they doing? What's all this about? Here am I today. Now we are going to spend a lot of time on market structure and these things. We'll spend more of the time on market structure. We already studied um, risk management, know your number. You learn emotions and how you can control them. You learn all the stuff. Now, the main work is how do you know it's going to buy so you can buy? How do you know it's going to sell so you can sell? These are the things we are coming to waste enough time on so that you can grab it very well. If you don't understand it, you are lost. Don't miss the next session. But what I would advise you is that today is Friday. Market is closing in about a few hours, let's say plus or minus 2 hours, 24 minute market is closing. Just take the chart, right? You see the chart and try to do something. Now, those are on your groups, according to the groups you find yourself. Once you do something, drop it there. Don't feel shy. I might be wrong. No, you might definitely. The only point where we can judge ourselves being wrong or right is what? When we enter the trade and the market did not go as we analyzed, as we put it, right? So start practicing, and I'm very sure that you get the concept super well. Do you have any question? You have a question? Uh, for entry, you go in this order: 1 day to 4H to 1H. All right, so this is what happened. We are looking at identifying the outlook first. Then after the outlook, that's the Fosenyo. After the outlook, before you get a direction. Okay. So you can get the outlook or the structure with 4H, weekly or daily time. Okay. Then the 4H now gives you the direction. Then you come and look for your entry on each time. Now, that actually depends on the type of trader you are, right? Yeah, sometimes I come a little bit lower to 15-minute time frame before I can make the decision. What's the best candle to buy or sell? Yes, there's no best candle, let me put it that way, but it depends on where the market is and what's define your trading style. Your trading style. For instance, we have a simple candlestick pattern that can give you. You have the medium and then the complex candlestick. So we are looking at simple. We are looking at reversal candles or indecision candles like the cheese, the rejection candle like the hammer, um, a little bit complex or medium complex candlestick like the two candlestick like bearish engulfing candlestick, bullish engulfing candlestick, harami, PSC lines, and those ones are the ones that you can use to get those areas. Then the three candles formations are um morning star, evening stars. Those are the ones you can use to. And if you are looking at chart patterns, within the chart patterns, we still have candlestick formations because the candlesticks form the chart patterns. So you can use any of these methods to define your entries. Now, where the area that candlestick appears also counts. Is it appearing at a logical area, considering as a support or resistance? And is it on a key level? We're going to look at that key levels and levels, point of interest. You factor all this and then see the power of the candlestick. That's not all. You look at the impulsive nature in the trend of the market so that you don't use the candlestick and get the wrong result. So, Mutunga, that is my opinion to your question, right? Remember, it's not a financial advice as well. So, you have to add a little bit of your research to it so you can make good financial decision after all. Enoch, you can unmute your mic.
Good evening, sir.
Yes, evening.
When you were speaking about the Fibonacci retracement lines, you were mostly mentioning the 61.8 and the 50% level.
Yes.
Is this to say that the other levels are not important or they are not key for looking at retracements?
Okay, all the levels are important, and when you put your Fibonacci down, let's say you put the Fibonacci down here, price market start moving from here and maybe got to 1.06 0, and the market has high impulsive movement and start dropping. Now remember, the trend is going up, and you are looking at the best place to buy if it is a retracement. Now the least price you should see the market at to confirm buying, continuous buying, the least should be 61.8, right? Now, many people, they FOMO at 50.0, and then the market ends up touching based on 61.8 or pushing to the top, continue buying, right? So we also have uh, patterns called ABC pattern to determine that because you see, Fibonacci also have a way to use it. It's best and it gives best result in trending markets. It gives best result in trending market. Now, when the market is moving and then it retests on 23.6 or 38.2, just understand that the trend is pushing. What are you looking for? You want to see if it is a retracement, is it a correction, or is it a reversal? That's what you want to find out. The market is moving from the down rapidly and got to a certain level and is coming down. You want to find out if it is a retracement, correction, or what. That is why you need a Fibonacci retracement. Okay? Um, Enoch, is that okay? All right, great. So, Tunga said, okay, sir, I understand. Awesome. All right. Now, I hope you pick something for yourself in this session. We will go deeper than we will go deeper than today, and I'm very sure all of you will approach it professionally. So if there's nothing to add, no question, I'm gonna wish you the best of the month. Enjoy your weekend. And in Ghana, it's Ghana month. So I think this from first March, they will tell us to eat Ghanaian food where Ghanaian stuff. So you are Ghanaian, please wear eat Ghana food and wear Ghana stuff. If you're Nigerian, you can join us. You're South African too. You can also join us. Um, Job, sir, is which is a valid break of structure when price closes over the closing price, and that from the previous swing. So when price closes be over the weeks. Okay, so I'll give the question back to you. Go research on. When price closes over the closing price of the candle, that from the previous swing. So if I should explain it right now, it will take me some time because I want you to get the concept. Put this question in the chat group and we will answer it for you. But what you should understand is a break of structure is complete with a test. Okay? Break of structure is complete with a test. It can be a complex test or a simple. Now, it all based on how the structure of the market is, the volatility in the market, the momentum in the market. You need to consider all those things when it comes to frequency, so that you can go to identify breakout and fake out. Is that okay, Job? Right. Please remember to read your candlestick Bible so that you can make reference to understand these things very, very well. Do have a great weekend, and we